started with, you often say I started the the resource fund in 2008.
Worst timing
And
ever.
yeah, it
Yeah.
was the worst timing ever. But you've stayed the course, and there's something to be said for endurance. There's something to
Mm.
be said for um
I should
staying
get a
at it.
medal one day.
Yeah, yeah, because in the resource sector, especially in the junior mining sector, a lot of people get washed out during the bear markets. They leave the sector. We saw it in 2018. We saw it again in 2022 and 2023. People just couldn't handle it anymore, and they said, "I'm
Yeah.
done with this." Um, and you and I, we've stayed at it. And so I just want to
Yeah.
ask you, how does it feel to be the CIO and the founder of a fund focused on metals and mining in 2025 when suddenly we have a little bit of a tailwind?
Yeah, well, I think you can understand this because you've been in the markets long enough. We all know these are cycles. And when everybody is all jacked up and high-fiving, we know we need to take some profit. And when everybody is in despair and throwing in the towel, we know we should be buying. But actually, it's very hard, even for professionals, to not get influenced too much by all these emotions. And I remember very well at the depth of the market, late 2015. I had a one of our founders. We started the fund with three guys, and one of the founders, um, well, he just couldn't take it anymore. And I was convinced, and for me, it was actually proof that this was the bottom of the market. And I was convinced that we were near a substantial recovery, which started January 18th, 2016. And the guy who really helped me to understand the cycle was A.V. Gilbert, the famous Elliott Wave guy. Actually, I'm in a car and my driver is taking me to A.V. Gilbert because he's in Amsterdam. I will have drinks, and that's why I only will have 45 minutes to do this call. But when you understand cycles, it really helps you to survive the bad times and to stay sane while everybody's going mad. And as a fund manager with managing other people's money and my own money, but it helps to be less emotionally involved than when it's all your own funds which are invested.
Yeah. So, how do you manage your emotions? Because obviously, I mean, you're tuned in. I mean, you're as tuned in as I am. You're probably more tuned in, than I am even. And it's easy to get swept up in the emotions of the market, especially when I'm sure when you're looking at the fund P&L, you're talking about millions of dollars changing in a day, possibly. How do you stay calm?
Well, my character is that I'm a very stable guy. So I always say the range of my mood is between, well, let's say 6 and 8. I never feel a 9 or a 10, but I never feel a 3 or a 4 or 5. So, and I always sleep well, and I always wake up with a huge, well, with a big feeling. Oh, let's see what this day brings. And when markets go down real hard, let's say like the COVID crash, and I was having COVID during the worst days myself. You just should close the screen for a few days and just go for a walk or whatever. And actually, during the COVID crash, I didn't look at the screen for maybe 18 hours. And then I saw valuations which were so incredibly low. Next Gen was trading for 75 cents that we decided to start buying. And that was the low of the market. Um, so it's very important that you don't become too emotionally involved. And being a bit older and being a bit more, well, financially secure, that really helps to see the larger picture. And I made the worst decision of my life to start a resource fund in the summer of 2008. But it really helped me to become a better investor, because the last 16, 17 years, it was often difficult, but you have to work and study much harder than yeah, you would have done during a bull market. So I think we're much better situated now for this incredible new bull market, which just started. And now we have almost 200 million Canadian dollars under management. And
Wow.
that's wonderful, at these valuations. And we're just breaking out. You know the charts, the CDNX, the smaller stuff is just breaking out. It's just starting.
So the hard years taught you some valuable things that now allow you to be even more powerful during the good years.
Yeah, oh yeah. Oh yeah. We
Yeah.
will be rocking. We're up over 30% year to date. And that's with quite a large portfolio. It's much
Yeah.
easier to have these kind of big jumps with a small portfolio. Um, and and this really helps to get into the best deals now. And you know why we were able to survive? It was because of um, discovery investing. We always had a few big winners, and we lost an awful lot during the bad years. But we never had the pine tree or sprott experience that you had a fund of 1 billion uh, and everything started to break down and you had to sell. We never were forced sellers, never. And the mistake I've seen with a lot of the other large funds like the pine trees and sprott funds and Eric Sprott himself as well, they go all in on juniors. Currently, our fund is just 30%, 40% in exploration stocks, 20% in development stage stocks. And we spread our risk by investing in the chemicals as well. And I think the perfect fund for us when we grow this fund a bit more to 400 million is to have only 30% of the fund invested in the best world-class discoveries, only the tier ones, and another 30% in the best growing producers or starting producers, and then another 30% in the BHPs, the Rios, the Franco Nevadas. And because if you have a fund which is only junior mining, even in a bull market, you will go down 50% when there's a correction.
Hmm.
I've
Yeah.
been, maybe you've experienced it as well, but I was a private investor in this space in 2003, 2004. Then we had this correction around 2005, and
Hmm.
all stocks in my portfolio at 30, they all went down 50, 60%. And
Yeah.
actually, it was a start for me to discover discovery investing, because I had 3 shares out of 30 who did a bit better. And when I studied them, they all made a discovery that year. And that made them stand out. And that's why I started to focus on discovery investing.
Yeah, that's interesting you bring up 2003 and 2004 because I was just getting my feet under me back then, but I was very closely following my father's portfolio. And it's funny, if you look at the TSX Venture 25-year chart and you look back to like that 2005 period, it's a blip. I mean, it
Yeah,
basically the
yeah,
venture went from 2000 to 1500, which is 25%, but I remember that my father was like
yeah.
he
Oh, yeah.
wasn't sleeping well. It was Yeah,
Yeah.
so it's a 20% drawdown in the index, but his portfolio dropped 40 or 50% in like
Well,
4 months. Yeah.
that was my experience. So,
Yeah.
and even I mentioned this example in a fund meeting at our fund today, warning them that the bull market looks incredible, but you'll have these incredible drawdowns like the Bitcoin space has as well. In every bull market for Bitcoin, you have 5 or 6 of these 30% plus drawdowns. And that's why we spread our portfolio over many different areas in the commodity space. So let's say uranium has another cycle compared to gold. And we even added Bitcoin to our fund because I've been calling it digital gold since 2014. So why shouldn't we invest in it? And by having this broad range of different areas in the portfolio, it really helps to get the volatility down, because volatility, if you have a junior mining resource fund, volatility is killing you. And if you look at our monthly returns, now we have +3, +4, +5, -2. So we really succeeded in bringing the volatility down. I think that's very important, especially when you have a more mature fund, which is over 100 million in AUM.
That's a very important point you made a few minutes ago about sometimes you just have to step away from the screens for a few days, like back in March 2020. And sometimes there's times to be more active, and it feels like this is one of those times to be more active. But it's not always the time to be more active, and that's something that a lot of newer investors make the big error of is feeling they have to watch the tape every minute of every single
Yeah,
day, and they have to always be participating.
yeah.
Sometimes the best thing is just take a 2-week vacation. But like I recall, some of my best returns have been when I went on vacation for a week or had to do something else and I couldn't stay tuned to the market every day. And sometimes it just gives you time to think, and you need just time to think sometimes.
The same goes for private placements. We do a lot of private placements. We've had years we've done 100 private placements in 1 year, but we scaled it back to under 50. And because the best deals, not all private placements are good deals, but some of these deals are incredible. We've done a financing with Talon. What do you say?
Talon,
The Talon,
Talon metals.
the nickel discovery, and they did a financing, right after that this discovery hole of the deeper zone, and I
Hmm.
thought it was a steal, 22 cents with a warrant at 28. It's now a few weeks later, it's trading 28.
Hmm.
And this was the largest private placements we've ever done. We put in 1.5 million, I think, euros in one deal, and the amount of money you can make in a starting bull market in deals like this it's amazing. Even the warrants are valued according to the Black-Scholes model, which we follow, is over €500,000 profit now, and we got all those warrants for free. So to be able to invest large tickets, large checks in this wonderful market, which is finally recovering, and you have these ultra low valuations still. It's and not, this is the time we're very active.
Yeah, so you're very active now. That makes sense. There's a lot of financings that have happened in the last couple of months. Clearly, investors are taking a liking to the junior mining sector more and more. And there's a lot of reasons for that, a lot of tailwinds, including in the US with Trump 2.0 and all the executive orders and tariffs and pro mining, regulation from his cabinet members. And then even in the EU, the Eurozone, big budgets for the armed forces. They're going to need a lot of metals, and Europe also needs some mines to be built. So even though the woke policies have tended to shut down mining for the last couple of decades in Europe. That's going to have to change. And yeah, there's a lot of tailwinds for the sector. So I'm just curious to know how your process has evolved over, let's say, the last 10 years. Like when somebody comes to you, I'm sure you get pitched on deals all the time. When somebody comes to you with a new private placement or a new opportunity to invest in like a seed stage or IPO company, what are the things that you really look for, and the things that say no, I'm going to pass on that?
Yeah, we are getting pitched on average daily 5 to 10 stories, probably. Um, and although we told all of our brokers we will only invest in tier one, tier two projects, which means tier one project, according to our rules, is over 10 million ounces of gold discovery or gold equivalent, and tier two is over 5 million ounces of gold. Well, you know how rare these are. You only have one or two a year, maybe three or four. But you get plucked and sent all these stories, and well, most we ignore. Um, but when a new company is being pushed to us, so let's say pre-IPO or for the first funding round, if it comes from a very serious group, these guys have had success in the past, that then we look at it. Sometimes we don't follow our own rules because we know a huge hype is developing, let's say in silver now, or platinum and palladium, and then sometimes it's very tempting to jump on a new story uh, of which it will run because of we took a position in one of the players around the Idaho copper discovery, and that was without any success. Um, well, in the company, but just on its great area play. You can't lose on that one. But normally we're very, very selective. And that also helps us as a team to stay sane, because you can't look at 10 different investment proposals every day. So you should be very, very selective. And what we learned over the years, you always make the money in a one, two, three of the real big discoveries, and the mediocre ones will always be mediocre. And once in a while you have a whole, like the Talon one, the nickel discovery,
Hmm.
and that's such a wonderful. Well, you will do well.
Yeah, I'm very, very excited about the Tamarack project. That is, I feel like we're having a little quiet period now, but that will change soon.
Yeah.
Yeah, so I'm just interested. So which areas, so without talking about specific companies, if you don't want to, which areas of the world are you most excited about for new discoveries?
We don't care, actually, and we're metal agnostic. We're location agnostic. We just follow the truth machine. And if there's a wonderful discovery, there are very few countries we won't invest in. Let's say we won't do Mali, we won't do Russia, but we will invest in Ivory Coast or Peru when it's a real good discovery. And because we can spread our risk over 50, 60, 70 positions, you can have a lot of risk in one position. And we also understand that it doesn't matter how much you research a project, you will never know enough. And always something can go wrong. And look what happened to Ivanhoe with their partial mine collapse. So better accept you have a lot of risk in a position and make sure your position is never so large that it will break you. So our largest position into our fund is 5.6%. So when it goes down by 30 or 40%, it's not that much is happening to our portfolio.
Yeah, it's not fatal, but it's also hard to manage so many holdings, isn't it? Like to have 70 stocks in your portfolio, that seems like a lot of work.
Oh yeah, but well, we have a fund management team, which is like 4 persons now, and then we have like 3 researchers added to that team. So it's like, and then we have our traders. So I think it's 70 or 80% of the people in our fund are working on the portfolio every day. So we don't spend a lot of time on marketing and sales and investor relations. And of course we have 2 guys for investor relations, but everything is focused on the portfolio, it's focused on the research, it's focused on discovery investing. And we don't have boiler rooms calling investors. The investors, they know where to find us when they're interested. But I think that's also the success of our fund, is that our approach has been the same for almost 15 years now. Privately, I've been invested in these markets 20 years, and also the same goes for my macro views. I've written a few books, and people often tell me, "You still say exactly this. You talk about the same stories like you did 20 years ago. The debasement of currencies. One day, central banks will start to lose control. One day, central banks will start to buy gold themselves. And one day, there will be a scarcity of commodities. And one day, people will start to flee to hard assets." And it's almost my understanding, it's all happening now. It's all starting to happen now. All these stories. So I think this is the start of a generational bull market. And people will be surprised how much money will flee into hard assets and discovery investing and everything, because everything is getting scarce now. And countries are starting to fight for commodities. And
Mhm.
we see the start of a bifurcation of commodity prices. There's another price for certain metals being paid in the US compared to, let's say, China.
Let's talk a little bit about the macro because I feel like the macro is so paramount right now. It's really driving a lot of things. And I mean, just the first 6 months of 2025, my lord. I mean, between Iran and Israel trading blows and basically a full-fledged war,
Yeah.
without ground troops, to the tariff just insanity and madness and Trump playing his games and all of that stuff. It feels like China has been very quiet so far in 2025, but maybe that's just from my perch here on the other side of the world. I'm kind of interested first in what your take is on Trump and the rhetoric and bashing of Fed Chairman Powell, and what, like, what's the strategy here, and what do you think will happen if he actually is able to get rid of Powell?
Oh, there's a lot to unpack. Yeah. Well, I think the most important conclusion should be that so much has changed over the last, let's say, 8 to 10 months, in in so many ways, and it has been very positive for our space, because there's an awful lot of insecurity and chaos, and even in Europe they question if they can still rely on the US, and 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 that really helps our space, because even European countries are starting to flee towards gold. Look what's happening in Poland and some other countries. And many people here in Europe think Trump is stupid and he's a madman. I think he's like a fox. He knows what he is doing. All these tariffs is just a starting point for negotiations. But he's running the US like he's running a company. And you can run a company maybe like that, but when you run a country like that, you create too much chaos. And yes, he is succeeding to bring down the budget deficits. But he's playing with fire. And now even among his mega friends and supporters, what's happening with the Epstein list, is he will lose a lot of credibility and a lot of support by what's happening now. So the insecurity and the chaos is only starting to increase. Um, and what he has done for the resource space by pushing each and everybody in the US to start thinking seriously about restarting their own mining business and cutting the red tape is another very important development, which is very positive for our space. And and in a way, everything which is happening around the US presidency of the last few years, or even the last 10 years, for me, it's another indication that this is an empire in decline. And when you get crazy leaders, uh, um, you often are at the end of an empire, and it's the fourth turning stuff, the
I
famous book
was
by Neil
just
Hill.
about to say that.
Yeah. And but this all coincides and helps me to explain my big reset thesis, which I wrote down 10 years ago, that around 2022 or around 2020 or after 2020 we will see these huge changes coming. So in a way, I like what I see because it fits the scenario where our investment strategy is based on a scenario of a debasement of currency, of more chaos, of a flight to hard assets, of competitive tension between the East and the West, about the rise of China and the BRICS. So in a way, I love it.
Yeah, I mean, I love it too. I love it to a point. Like, I love it to the point where everything breaks.
Yeah, that's
And
risk.
and then it doesn't matter if you have a mining asset in Arizona when everything breaks and it's every man for himself and it's it's complete anarchy. But let's
No,
hope we don't.
wait. I have many clients and many investors in our office who are always afraid about next week it will all break down. And
Yeah.
I always tell them this famous story about Warren Buffett and his father. You might know this story. The dad of Warren Buffett, he bought a farm. When was it? Around 1910 or whatever, because he was afraid that it would all collapse one day. The Buffett family sold the farm. When was it? In the 1930s or 40s, because the real collapse never materialized. And so I think we're always a bit influenced by religion and the end of times scenarios, but the end of times, it doesn't happen very often. Maybe once in the 10,000 years. So Um, but what will happen is a further debasement of the currency. What will happen is a further flight to hard assets. What will happen is more scarcity of great land to build on. And so I like to concentrate on the long-term trends which are quite certain, and to invest according to these long-term trends. So you can't go wrong long term with real estate in uh, in great jurisdictions. I've been investing in real estate in the last few years in Dubai, because you buy world class real estate in a new, well, world-class city being developed. That's around 2-3 million people there now. It will grow to 4-5 million people within 10 to 15 years. There's scarcity, and the valuations are 40-50% of what you would pay for a similar project in Europe or in the US. So there are always investments possible where you have a very good risk rewards ratio.
I want to just explore this Powell thing a little bit more with you because I think it's very interesting. So it's clear that Trump is obsessed, with this guy and getting rid of him, or else he wouldn't tweet about it every day and say it in every press conference he holds. He's absolutely obsessed with it. And the reason why I believe he's obsessed with it is he's aware of some of the real underlying themes in the economy, including that the US housing market is very ill. The prices may still be high, but the market is not really moving. It's not transacting, it's not clearing. And just the amount of treasury debt that the treasury has to place over the next 12 months is quite gargantuan. So, he basically thinks we need the Fed funds rate lower so we can sell all this paper at a cheaper interest rate. But I think what he's not aware of is that if he does this and puts in a proxy puppet, he's going to lose confidence in the dollar overnight.
Yeah, yeah. But
And yeah,
that's what I said in the previous answer. He's taking huge risks with his bully politics, uh, and Trump is only interested in a way in Trump himself, that he will look good, that he will have the success, that the economy will recover because he did the right thing. So he will choose for the easy way to get a quick fix, and he might ignore the longer term risk, while a central banker like Powell will be much more aware of the long term risks. And lowering interest rates now in a massive way will lead to a second wave of inflation, which will happen anyway, but it will come much faster. And so I understand where Trump is coming from and where he wants to go. And I understand why Powell and central bankers are trying to, well, to stay sane. But Trump, because of his character, he will make sure Powell will be gone in a few months, and Powell will be gone for sure in May. But that might be too late for Trump. But this helped in a way to further guarantee more chaos, more flight towards gold, more debasement of currency, more inflation, and sorry that I might sound a bit irresponsible, but I have to analyze this as a fund manager, and I have to make the best decisions for our investors every day. And, and when I compare the situation to, let's say, 20 years ago or 25 years ago, when we were looking much more into the smoke and looking into the future, you wouldn't you had an idea what the long-term trend would be, but you were looking in the smoke and there wasn't that much clarity. But now it's so obvious what will happen, and that makes life for an investor that much easier.
yeah. So I agree with you. I don't think Trump can wait 10 months. I don't think he has the patience. So it's going to happen. It's going to happen this year. It's just a matter of when and how it happens, but it's coming.
Yeah,
And so we need to be prepared for that. If you're an investor and you're not seeing that coming, you're not being a, responsible investor because it's going to have big repercussions. Big
but
repercussions.
what's a bit of difference between you and me, and we've talked about this before. You're an American guy, and the world has this all eyes on America. But I live in Europe. I traveled a lot to Asia. I have real estate in Dubai. I see this from a world point of view, and I don't care about interest rates in the US that much because it's not the most important topic. Although if you watch CNBC, you would think it's the most important topic. And people in the US have this US centric point of view, but sometimes in presentations I sort of say it as a joke, but in a way it's true. The US is an island in the ocean with only 330 million people.
Well, soon we're going to have Canada, so it'll be like 370 million.
No, but if compare it with the numbers of the BRICS, you talk 3-4 billion people,
I know.
and
I know,
and
yeah.
and yeah.
So that's where I want to go to next because China has been very quiet, in my opinion. They're not doing anything to really make headlines in the West. Trump's kind of backed off them because he realizes that he's cornered on the rare earths and copper and all the metals. He can't fight a real trade war with China because he's got one arm tied behind his back. Um, what is China doing, and what do you think their
Mhm.
strategy is here? Yeah.
China is doing the same like they've done for the last 30-40 years, playing chess as silent as possible. Although they became a bit more vocal in the last few years, especially with their criticism on the US. But they know the US is making huge mistakes. And never disturb your enemy when he's making mistakes, don't.
Mm.
And I think they use Putin in a very smart way. So Putin is the pit bull, barking and biting. But China has Putin on a leash because without China, Russia is finished. So China, in a way, is using the pit bull to behave in a way so they don't have to say that, they don't have to do that.
It's very interesting. And what do you think China is doing with gold? It seemed like in the first several months of 2025, there was a lot of Chinese gold accumulation, both by the government and the people. And then the price got too high. And as China often does, they seem to just lay off and pull back their bid. But then silver took the helm in June and rocketed, higher. So, what is China doing, with gold and silver?
China and Russia understand very well the importance of gold because it's the anti-dollar. And I once started the Bullion web shop in 2008, Amsterdam Gold. And I was doing research. I was looking into the Asian demand, Chinese demand for gold. I couldn't believe it that China didn't own any gold, hardly any gold at that time. And Chinese demand and retail demand was very low. I couldn't believe the numbers because I thought it would be massive. Well, it became became massive, but that all happened after Lehman. Look at the stats after Lehman. They became aware that the US was a house of cards, a collapsing house of cards, and then they really kicked into higher gear. And they do understand that silver is poor man's gold, and that still they do understand that both gold and silver are manipulated and manage to stay low because that supports the dollar. And when the US started to weaponize the dollar in the last few years, I think China and Russia decided to start weaponizing gold and now silver. And the current move of silver, the breakout of silver in the last few weeks, last few months, I think has to do with the actions of Russia and China. But many of these actions are covert, that they know the COMEX paper trading system is on the verge of collapse. They know this is musical chairs, and they know you still can get physical for these ridiculously low valuations. But one day soon, we will see a collapse of these paper, gold, and silver markets. We're in the first innings of these of this collapse as well. That's my yeah, humble opinion.
All right, I'm going to ask your humble opinion on two more things, and I'll let you go to your to your meeting. Uh, $50 silver price was the nominal high in 1980. It was the nominal high in 2011. Every chartist has that 49.50 to $50 level on their chart. That's obviously a huge psychological level. Does silver get above $50 an ounce in the next 12 months?
It will reach $50, I think, within the next 12 months. And then you'll see the same what happened when gold was reaching 2000 or Bitcoin was reaching, let's say, 100K. You always have then the tug of war to have a breakout. But once the $50 level breaks for silver, people will be shocked how fast we will see $100.
Mm.
And it won't stop there.
And final question: the copper tariffs and the aluminum tariffs and the steel tariffs. I mean, they seem a bit foolish from my vantage point. I'm interested in what your opinion is. And is Trump just going to do another taco on these copper tariffs because it's just going to cause inflation like all throughout the economy?
I think he uses the tariffs in many respects. It's like starting negotiation to pressure other countries, but by using this breaking news headline of copper tariffs, he really kickstarted investments in copper projects in the US. uh, Rio Tinto just decided to start building Resolution, you know, where they um, where they would have been waiting for years and years to take that decision. Um, so there are many reasons why he is um, taking all these steps to disrupt, in a way, certain markets. Um, and maybe the tariffs will be scaled down for copper to 10%, but the changes he initiated for U.S. copper companies and U.S. copper projects will be for real and for years and for decades to come.
The Resolution project, it's in the final stages of getting the full green light there in Arizona. And if it gets the green light next month from the Forest Service, the final green light it needs, the construction will start at some point in 2026. And if all goes well, the two biggest mining companies in the world will spend billions of dollars, and it will take 6 or 7 years to actually get it built. And then it will start to produce copper in 2032 or
Yeah,
2033.
but there will be many jobs and many investments into the U.S.
Oh, yeah.
But what we haven't touched upon, that Trump knows and understands the U.S. has almost run out of options to keep the ship afloat. So he needs to pull some last cards to really be able to convince the world that they might need to work together with the US to come to some kind of debt restructuring and keeping the dollar afloat, because the US is at risk of a real lose of a trust can in the US dollar and in the US economy can be lost when he makes uh, too many mistakes.
Yeah, we're walking a tightrope right now
Yeah.
here in
Oh
summer
yeah.
2025. All right, I'm gonna let you go to your dinner and your meeting. Enjoy the weekend, and thanks again, Vim.
Same to you.
Cheers.
Thanks.